Good morning, good afternoon, Southern California. AM 1220, KHTS, FM 98.1, and Hometown Station Facebook Live. Glad to have you back on this special edition, special broadcast of Financial Hour. I'm joined by my co-host, Dave Cantrell and Fred Arnold. Dave, welcome.
Well, thank you very much. Glad to be back. Glad you're back, because last week when I had to do it by myself, Patty and I had a little issues here and there, but we're definitely glad that you're back in the saddle, that's for sure.
Thank you. And you know what? The stock market's in the saddle a little bit up and down.
Yeah, it got beat up a little bit yesterday. I think, they were saying that because of the increasing coronavirus cases, that recovery just keeps kind of getting pushed back a little bit more and more and more. Recovered a little bit today. Banks did really well today. I think the Fed eased some of the restrictions on banks, which is good because it allows them to, loan a little bit more money. So that's always good. But I think long term, I think the market is still a little worried about the coronavirus cases spiking in the most populous states. That's really what's happening.
Yeah, and we're seeing, of course, like you said, that happen. But that's no surprise.
No.
People are going to get out. More people are being tested.
Right.
Which is a good thing, which means more people are going to test positive, because how many people did we miss?
Right, exactly.
Right?
Yeah.
So that's number one. Number two, we live in America.
Yeah.
We like our cars. We like our freedoms.
Yep.
We like our freedom of speech.
Yep.
There's so many freedoms that we have. Part of it's just getting out and about.
Yeah.
And you're going to have an increase in that. I think we're a completely different society than we were 3 months ago, though, because you see everybody is typically professional about their hygiene and about being respectful to other people's space now.
Yeah,
I mean, would you not agree that we have not transitioned into a much more conscious society when it comes to that?
Well, absolutely. I mean, definitely. I mean, I think about it in the back of my mind that I've actually found myself in many situations at work or home or around where I just find myself backing away from people unconsciously because I feel like, okay, I think I might be closer than 6 feet, and I kind of start backing away a little bit. So,
well, there's some people you don't like anyway.
That's very true. That happens more. I mean, it's usually people backing away from me. So I haven't had a problem social distancing because people don't like being around me anyway. So it's been pretty easy.
So check this out. There's been over 11 trillion with a T dollars pumped into the economy by the worldwide economies.
Yeah, all over the world.
That number is phenomenal.
It's just crazy. I mean, when you think about the amount of money, and this is stimulus from not just our country but other countries,
right.
$11 trillion is going, to trying to help people through this, and it's math. I mean, it's nothing I ever thought I'd hear. That's for sure.
The numbers are staggering. Now let's talk about interest rates.
Yeah.
Because I believe they're going to continue to be soft, and there's something called maybe messing it up. And you're an old guy. Well, yeah, I know you're old, but you're also very experienced when it comes to trading in the markets. Yield curve control. There's
Inversion?
a word for it. No, where they control the yield curve.
Oh, yeah. So, they're basically controlling it through other means.
Yes.
They're
through
adding
the purchase
liquidity.
of bond,
Yes, exactly.
And we're going to see yield control, like being able to control interest rates.
Right.
Like they'd never done it before. Before they can manipulate interest rates.
They can.
Right?
They can.
But I believe in this upcoming 18 months or even at least 12 months, the Federal Reserve is going to control interest rates.
Absolutely.
Because understand, and people think, well, they can drop the federal funds rate, at any time to 0 to 0.25%. Yes, but that's the money they lend out to other banks from them, so they can control that.
Right.
What they can't control is the price of many free market bonds and bills out there, T-bonds, T-bills, and notes. But they're going to control it. They're going to do whatever manipulation they can to keep interest rates low.
I couldn't agree more. And the Fed has actually, like we talked about last week, they came out and said they're going to keep interest rates low for 2 years.
Yeah.
And you're right. The way they do it is they either, they cut their Fed fund rate. You're right. But when you're dealing with bonds, the one thing that you have to remember is all bonds have interest rates, because if you're lending when you buy a bond, essentially you're lending somebody money and they're going to pay you interest interest for that. Well, the higher that price goes, the lower the interest rate goes. So if the Fed goes out and starts buying bonds, that in fact makes interest rates drop down also. So that's another tool they have that they can use, and they can do that on the, they mentioned they can do it on the corporate side. They, because remember, the bailout of the auto industry years ago was, the government coming in buying stocks, so they have many tools at their disposal that they can use to keep those interest rates where they want to keep them.
Yeah. We're going to jump to a quick break, Dave, but when we come back, I want to get into the conversation of why is housing continuing to increase in value?
Yeah.
And talk about the shortage in housing and why we have a shortage in housing. You've been listening to online, actually been watching online, AM 1220 KHTS, FM 98.1, hometownstation.com. We'll be right back.